Good morning, everyone. Once again, this is Black Forest coming to you with another market analysis video. Currency pair breakdown. This morning, we're going to be looking at the Euro USD. Now, before we get started to break down this currency pair, we have to state that this video is for economic purposes only. This is not financial advice, okay? But we all know why you guys are here. You guys are here to find good, credible Forex content that can help improve your ability as a trader and that can help put a little bit of extra money in your pocket, especially in these troubling times. Okay, so with that being said, let's go ahead and break down this chart and this currency pair. Now, if you've been watching the Black Forex videos for some time, before we discuss what's happening on the chart, let us discuss what's happening with each currency pair let's discuss what's happening with each currency in the currency pair respectively, starting with the euro. Okay. Now, the euro overnight did have some, let's check this out. We did have some good economic news come out about the euro overnight. We had an uptake in all of its PMIs. The market composition one was not as good as it was previously, but it was better than it was forecast. But the other two the other two PMI newses were definitely higher than previous and higher than what was forecast. Okay. So we do have some good economic news coming about the euro, but that's being overshadowed by the talks of the EU placing more sanctions against Russia to try to punish them for their war against Ukraine. Okay, so when they have placed these sanctions on Russia in the past, these sanctions have had a reversal negative effect on them. So they place the sanctions on Russia, think it's hurting Russia, but when the economic fundamentals of these sanctions play out, it actually hurts the EU more so than it's hurting Russia. So they're still continuing to say they're going to place sanctions against Russia, so we're going to see a reversal negative ripple effect of these sanctions taking place on the entire EU and entire European continent's economy as a whole. Then we also have a destabilization of the entire European continent's a destabilization of the entire European continent's economy due to the Russian-Ukrainian conflict that's being fought on and being fought in Europe. Okay, so due to this, we have a lot of FUD surrounding the European continent's economy, which is fear, uncertainty, and doubt. Okay, so despite the good economic news we did have come out about the euro, it's being overshadowed by the talks of more sanctions coming out, and plus the overall FUD, fear, uncertainty, and doubt surrounding the entire European continent's economy. So we're going to see a continued weakening of the major three European currencies, which is basically the euro, the CHF, and the British pound. Okay, so you got to take that into effect. So if you see some good news coming out, some positive news coming about the euro, you have to look at the geopolitical events that's also surrounding what's going on with the European continent, to get a good idea of how these news are actually going to play a part in the strength and weakness of this currency. Okay. Now with the USD, we did have some moderately negative news come out about the USD during yesterday New York session, and we do have a lot of economic news coming out about the USD around 8:30. So if we start to see more positive than negative news or overall positive economic news come out about the USD, along with the lowering of oil and the lowering of oil prices, then we will see a strengthening of the US dollar. Okay. But if we start to see more negative news than positive news surrounding the USD, and we start to see an uptake in oil prices, then we will be in a situation we will have a weakening of the US dollar. We will know better yet where we stand with the US dollar between 10 and 11 o'clock once this news comes out and actually starts to cycle through the markets. Okay. So with that being said, now let's discuss what's happening on the chart. So basically what we start to have here is a very broad range, with this being the upper part of the range, this being the lower part of the range. This is the upper extreme of the range, and this is the lower extreme of the range. So we're going to see price continue to basically bounce between this range Every time we get as low as here, we're going to get up to here. And every time we get as high as here, we're going to bounce down to here. We can get as low as this low extreme before we come back into the range, or we can get as high as this high extreme before we come back into the range. Now, we could continue also see a drop into the short position as well, which is solely dictated by the geopolitical events affecting each currency. One with the oil prices for the USD and how the sanctions are going to play out on the entire European economy as well. Okay, so but for the most part, of geopolitical the geopolitical events that's affecting the basically the markets hold as is, we will have a range if we have a change in those geopolitical events, once the sanctions come out and it starts to negatively affect the euro, and we start to see a lowering of gas prices, then we will definitely see a drop down. But if we start to see an increase in gas prices, we could see a weakening of the US dollar, which can cause more an aggressive of a push up. But for the most part, we're just going to be bouncing between this range. Every time we get as low as here, we're going to come up. Every time we get as high as here, we're going to come up. Sometimes dipping low to this area here, and sometimes creeping as high as here. Okay? I hope that information was helpful for you guys. Happy trading.